everyone to this webinar, Insurance, Ethics and Sustainability, organized by the Observatoire de la Finance, based in Geneva. So I'm Virgile Perret, project manager at the Observatoire de la Finance, and I will have the pleasure to moderate the panel discussion on this topic. Before introducing our guest, I would like to briefly recall that this webinar is part of a series of events organized by the Observatoire de la Finance in support of the Global Prize Ethics and Trust in Finance for a Sustainable Future. So let me just touch a few words on the competition. The Global Prize is an essay competition for young people under 35. It's for professionals and academics under 35 years old. And they have to write an essay of less than 5,000 words in English on a topic related to ethics and sustainability in finance. And the deadline to submit the paper is 29 May 23. And one of the goals of this webinar is to show that there are plenty of topics related to ethics and sustainability and insurance that future candidates can choose to submit a paper. It's because we have many candidates writing on financial and banking issues, but less candidates interested in insurance questions. And so we would like also to show the range of topics on this for the competition. First, I would like to introduce Johannes Brinkmann. I will proceed by alphabetical order. Johannes Brinkmann is Professor Emeritus at the BI Norwegian Business School in Oslo, with ethics of insurance and risk as one of his key research interests. We have Paul Dembinski, who is the founder and director of the foundation of the Observatoire de la Finance, based in Geneva. He's a co-initiator of the Global Prize Ethics and Trust in Finance for a Sustainable Future and co-president of the jury. Paul Dembinski is also a professor at the University of Fribourg in Switzerland. Aaron Doyle is a professor of sociology and criminology at Carleton University in Ottawa, in Canada. He has published 2 books and a number of articles and chapters on the sociology of insurance industry. Then we have Aurélie Fallon-Saint-Lô. Aurélie, she's the head of property and casualty underwriting and business strategy for climate and sustainability at AXA. She focuses on integrating sustainability and climate strategy in property and casualty underwriting, as well as on a net zero insurance alliance task force on nature-related financial disclosures, ESG policies, and green business development. Welcome also to Paula Jarzabkowski. She's a professor of strategic management at University of Queensland and an expert in cross-partnerships to address insurance protection gaps. Her forthcoming book on this topic is called Disaster Insurance Reimagined, and this book will be released by Oxford University Press in 2023. Finally, we have Henriette Server-Tveit. She's director and partner at TRIC, the largest provider of general insurance services in the Nordic countries, so Denmark, Norway, Sweden, and Finland. Henriette is an experienced commercial executive with a demonstrated history of delivering profitable growth in Norway and internationally in a variety of industries. She is dedicated to contribute to the transition towards responsible and sustainable business models. So thank you to all of you to be with us for this panel discussion. And I will give the floor to Johannes Brinkmann, who will make us a short introduction to present a few elements of reflections on the general topic of ethics and insurance. And after his introduction, we will proceed with the panel. So, Johannes, the floor is yours.
Yes, thank you, Virgile. Just trying to share my screen as well. Thank you for the opportunity to play the to play the role of the band playing before the really great band. Yes, just perhaps an old habit, trying to clarify a few terms first. So I'm a Professor Emeritus of Business Ethics, so I'm supposed to start with a few definitions, I guess. Put shortly and simply, ethics investigates morality, and that is investigates what is right and wrong, or investigates thoughts and practices and why these are right or wrong. And narrowing such a great and grand project makes really sense. So business ethics is an example of applied ethics, and that is still quite wide. So insurance business ethics is much better and can even be narrowed further into insurance industry ethics. For example, first, perhaps even with subunits, non-life property casualty insurance versus life and pension insurance, or into a super unit financial industry ethics, which insurance industry is a part of. And if you want to narrow it down even further, then you can, for example, narrow into insurance professional ethics and look at all these professions such as insurance actuaries, lawyers, underwriters, marketers, you name it, insurance investigators, PR persons, not the least. Or, and that's what I, in a way, was focusing on when talking to my students, insurance consumer ethics. And that's, of course, it's the good guys versus the bad guys. And it's about insurance use and misuse. So that's one way of starting. Another way of starting is business ethics and relating it to overlapping labels when talking about good business practice. So the visual version first, that you in a way can say that business ethics is the more academic tradition, which you can be a professor of, and more popular labels are, for example, corporate responsibility or sustainability or stakeholder management or corporate citizenship. And if you prefer it in writing, then you can say that in a way, business ethics is the interdisciplinary academic field about constructive criticism, investigation of what goes on in business and at business schools, or sustainability, meeting the needs of present without compromising the ability of future generation to meet their own needs, or corporate responsibility, if you want to use the EU definitions, the responsibility of enterprises for their impact on society. Then you can look up yourself, stakeholder management, corporate citizenship, etc. Different ways of talking about the same great topic. What is the proper role of business and society? Next, insurance for me, it's in a way natural to consider insurance as a construction of risk and responsibility sharing in a pool, staged and administered by an insurance company, and let's hope the pool is sustainable, staged and administered competently and responsibly. Linking it to our topic today, the historical core of insurance, and or at least much of mutual insurance, is ethicalness rather than profitability. So it's in a way the thought of risk and responsibility sharing, solidarity, one of all for one, moral opportunity rather than moral hazard, or in spite of moral hazard, if you wish. And if you want to look at really good examples of this old tradition, perhaps one can take a closer look at microinsurance, as I've done some years ago, also protecting poor people against minor risks for a minor premium, but which makes a lot of a difference in the life situation. And another topic that is interesting also to address would be the degeneration of insurance, which risks contagious cynicism. There are movies about that even, where companies in a way cheat their customers and vice versa. And that is also now and then used as, for example, moral neutralization, justification of insurance abuse by insurance abusers. The societal responsibility of insurance, briefly about that as well. So many, and that is in a way my point of departure, many industries claim that they believe in and that they practice CSR, corporate responsibility. And I think that these claims are above average present in the insurance industry, at least ideally, because the core product of insurance is related to promoting societal security. So if you like fine print, since we talk about insurance, this quotation is one of my really favorite grand representatives of academic insurance research, Tom Baker at the University of Pennsylvania in Philadelphia. Well, the insurance of the question of corporate responsibility, one could also say, is rather empty and needs to deserves to be specified further. So just briefly in a few theses as input for your panel discussion afterwards. So the primary question first, one specific responsibility could be is if the insurance industry not only has a right, but a moral obligation to present and explain its functional principles and to promote financial literacy among its customers. So many consumers pay little attention to the details of their insurance policies. Improving consumer knowledge is important for protecting the industry's original ideals and for preventing contagious mistrust. So interesting, we looked into that, Aaron and I, when discussing our paper. For example, the insurance industry company is about increasing consumer insurance literacy. The second one is the question on how can insurance avoid discriminate against people unfairly. So what is, for example, fair pricing of auto insurance based on gender, different legal rules in different countries? Interesting question for student discussion. The third and the fourth thesis, responsible risk modeling, which is sort of the question of actuaries, since the core of insurance is the staging of sustainable pools. The actuary professional quality of such constructions is a primary ethical issue. And it's in a way the question of mathematics, on the one hand, looking into the past, and the other one using prudent judgment when talking about uncertain futures. That includes, not the least, climate change questions and risks, for example. The fourth thesis relates to responsibility or shared responsibility for moral hazard, because insurance as a side effect increases the risk of abuse of insurance, that people behave differently when insured from when not being insured. The fifth thesis could be responsible division of public and private risk sharing across various fields and division of labor with government. For example, when it comes to disaster insurance, natural disaster insurance, the Norwegian natural disaster pool is an interesting example that has been copied in different other countries as well. And the last one, building a bridge to the financial industry that Paul was talking briefly about, what to do with all this insurance money for, in a way, preparing for future payouts. So the question of responsible investment, not only for profit, but using investment power for social development, or, for example, in our case also for preparing for climate change. Given that private insurance among the largest institutional investors globally. And the classical example looking from the Norwegian perspective is, for example, this Norwegian oil fund, which is one of the largest global investors. So the source of these 6 theses was sort of, in a way, recycling is a paper of Aaron and me published last year, Notes Towards a New Ethics of Insurance. So there you find further sort of fine print and elaborating these theses better. So just for wrapping up, what I would hope will happen in the panel discussion is, on the one hand, constructive self-criticism by the insurance companies. How about that? There are some insurance companies that communicate above average ambitions when it comes to social responsibility and sustainability. They can expect it to walk their talk, to serve as role models. But on the other hand, that is difficult. So when it comes, for example, to Henriette's Insurance Trig, the last CEO, the previous CEO, Stine Bosse, was very ambitious in this regard, and then faced trouble and then stepped down, was replaced by a Norwegian finance director, right? So I mean, it's not easy fighting for sustainability and responsibility inside insurance company, because you have this conflict. Sorry, this is about getting the phone off. Yes. The other one is constructive criticism by academics, as Aaron and I would say, what we deserve, what we owe the business world is, in a way, on the one hand, coming with constructive criticism, looking from outside, and on the other hand, being relevant, in a way, thinking in a kind of action research, staying relevant in tight collaboration with the industry, for example, for critical social science of what happens in the insurance industry. There's nothing more practical than good theory, it has been said. So this would be our part, and then I leave the floor to you. So hope you've got at least some ideas of for a warm-up, and I'm really looking forward to listening to you and what your views about these questions. So you may depart from my points, and I'm sure that you have your own points already, because Virgile gave you some advanced briefing in addition, I assume. So thank you for your attention.
Thank you very much.
That was my contribution today.
Thank you very much, Johannes, for your contribution. It provides a very nice overview of the problematic, and also you provided some advice for our dialogue, which are very useful. I'm not sure we will cover all the points you shared with us, but at least we will cover some of them for sure.
Yes. So thank you once more for listening.
Yeah, thank you. We will. I will now start the discussion with our panelists, and my first question will go to Aaron Doyle. Aaron, we heard from the introduction of Johannes that the insurance industry is more than a business. It's a business with important social responsibilities. What do you see as the roles of the insurance industry in relation to climate change? Do insurance companies have an ethical responsibility to act as a guardian of climate security?
Okay, well, thanks very much, Virgile, and thanks to you and Paul and the Observatoire for organizing this webinar on a very important topic that we don't talk about enough. And so let me just start first by saying we all need to do more. So everybody on this Zoom, personally, in our professional roles, collectively, we all need to do more. To keep the global temperature to with only rising by 1.5 degrees Celsius, we have to cut emissions by 43% by 2030. So it's not a matter of doing something and not a matter of we're doing something good, but it's a matter of doing everything at this stage. So we all need to do more, but insurance is this vast, often hidden international institution with titanic resources and capabilities that has a special global place and special responsibilities in the fight for climate security. And as you mentioned, Johannes and I have argued that insurance is not just another business. So insurance occupies a very special social role. And we call this idea insurance exceptionalism. So in its historic roots, insurance is this ingenious way of producing mutual help and producing a community of social solidarity. And so we argue that insurance has a distinctive place as a kind of central social institution that works with government, like other of our key social institutions, like the law, medicine, the news media. So insurance is and should be more than a business. And this is, it's aspirational. So it's stating an ideal. And, too often in today's complex business world, insurance has moved away from these original idealistic roots and being able to do something about the global heating crisis is becoming the greatest test of this proposition about the special place of insurance. And I've been thinking about why it's so hard to act on climate change. So what are the sources of inaction by everybody? So not just by insurance, but by governments, businesses, you and me, other actors. And some of the causes are related to problems of collective action. So problems of getting individuals and organizations to work together in the common good, and especially getting different nations to work together. And some of the challenges with global warming are challenges around time and temporality and the problems of getting various actors to respond to challenges with long temporal horizons. And some of the causes of inaction are to do with uncertainty and limited risk knowledge. And, as I've been thinking about it, I've been thinking that all of these challenges are challenges that insurance and insurers are well suited to address. So insurance is fundamentally about the collective working together. Insurance is a global industry that works across national borders. Insurance is about managing risks with uncertain temporality and with very extended horizons. And, of course, insurance is fundamentally about managing threats in conditions of uncertainty. And so there's different roles we can talk about, and we'll circle back to it. But just to start talking about that, like one key role of insurers is that they have a very important position on the public and media stage as objective risk experts. So when advocates want to demonstrate that climate change is a reality, advocates will do this by pointing out that the insurance industry treats climate change as real. Like they've believed for a long time that climate change is real. And so climate change is real because insurance companies say it's real. And so one role of many that insurers have is this important symbolic role in the fight against climate change. So I'll stop there.
Thank you. Thank you, Aaron. Then I would like to ask Paula Jarzabkowski the second question. Paula, the economic and social impact of climate-related disasters has been growing steadily over the past decades, and yet it is estimated that globally 70% of the economic losses from such disasters are not insured. The lack of insurance lays the burden of financing reconstruction on the shoulders of governments, international organizations, and the victims. So is there an insurance protection gap increasing due to climate change, and how is it affecting developed and developing economies? And can the private sector address this problem alone?
Yeah, thanks. So I think we can say a couple of things on that. So the first thing is, yes, there is an increase in the insurance protection gap. You'll probably see that companies like Swiss Re put out figures every year on the insurance protection gap, which is the gap between economic and insured loss. I think in terms of understanding how climate change and insurance are interacting around that, we need to be aware that at least some of that gap, just as a sole or raw figure, are things that wouldn't have been insured anyway. So it's not 100% reliable to say that. But if we look at how climate change is affecting insurability and how that's affecting that gap, then I think that's an important area to look at. And if we could start with that in developed or advanced economies that already have an established insurance industry, so most of the OECD countries, for example, then how that's interacting is climate change and an increase in urbanization of assets, high value assets. So basically people building their houses in cities or in places where climate effects are now getting worse. And so it's both the weather itself getting worse alongside the changes in the built environment that we've created are sort of compounding that effect. Now, normally insurance would have been a good product and continues to be a good product for some in terms of your random losses. But the problem is that climate change is meaning that some areas are increasingly less viable. You will have seen Hurricane Ian's effects on Florida recently. I mean, the figures coming out from that are something like 75 billion in insured loss. I haven't seen uninsured loss yet, but we do know that about 47% of houses apparently were not insured in Florida. So the uninsured loss must be huge. So in that sense, well, this is what early figures are showing us. So what we're seeing is that somehow there's been an interaction between the properties that we have that are no longer viable under climate change. So they are more likely to flood. They are more maybe older types of assets that weren't built in particular ways that will withstand hurricanes, for example, or they've been built in areas where wildfire is now a problem. So insurance would normally have been good for the random losses that some of those had, but now so many of them have losses that insurance prices in the private sector unavoidably must go up to cover those losses. And at the same time, insurance companies are, for example, withdrawing insurance. So right now I'm in Australia at the moment and there's a crisis of flooding. Houses that have been flooded once and possibly twice this year are simply not being offered insurance policies, understandably and prudently by insurance companies, particularly while flooding is ongoing. So what we're seeing from the effects of climate change and how they interact with our built environment and insurance in these advanced economies is we're getting increasing financial exclusion. That group of people with those legacy assets are falling out of the insurance net. So that's a safety net that we've been able to take for granted in these countries. So, we know to get a mortgage that you need to get insurance. And we've just assumed that people who have a 25-year mortgage will also be able to get 25 years of insurance. Increasingly, that's not going to be the case, or already is not the case for a number of people as they get under this extreme insurance stress. So that's one thing that we see happening. And I would say that that is not just, people who build in nice places and it's their own fault. I guess what I'm trying to say to you here is this is people who, through no fault of their own, may have legacy assets that are just now not very viable. And we don't have insurance to support them anymore because they can't afford to be inside that net. The issue is a bit different in developing economies because many of these are countries where there wasn't a big insurance market anyway. So they fell outside the insurance net anyway, for a whole host of reasons, including the costs of insurance in relation to sort of household incomes and things like that. Their climate change is certainly having effects. I think some of the interesting things that are coming in there are efforts to bring insurance as a form of capital to support disaster response or disaster relief in those countries. And I think I'm going to talk a little bit more about that a little bit later when we look at, so I won't go into it in great detail, but I think that insurance is a product that can provide capital well under certain circumstances. And it's showing that it can do that in developing economies in terms of these new insurance products that provide liquidity after disaster. It is a big problem for those countries that have relied on insurance, advanced economies, because they're losing that access to insurance through climate change. And the private sector, if it takes risk prudently, can't cover that by itself. It has to put prices up where assets are going to be more prone to disasters or losses. So what we need to see is much more public-private collaboration. You already do see that in a number of countries that have taken a proactive stance. So France, Spain, and Switzerland have a very proactive stance to public-private collaboration around the disaster aspects of insurance. They're just as prone to climate change, but at least they have perhaps a more comprehensive grip on the relationship between public and private in making sure that premiums stay lower. I think the other thing we will have to look at is how we use insurance as a tool for climate adaptation. There's been a lot of talk about that. Governments will have to be involved in moving into, like, for example, moving houses away from areas. Insurance can't make you move your house. Insurance can't even really make you build your house in a different way. But what it can do is interact with the systems that do that, so that we could get people in the necessary adaptation and climate relocation type things that we're going to need to do over the next few, sort of 50 years, maybe a bit quicker than 50 years, quite frankly.
Thank you very much, Paola, for these very interesting insights. I think, yeah, financial exclusion, as you mentioned, is a very important topic, also in terms of ethics and in relation to sustainability. So now I'd like to turn to Aurélie Fallon-Saint-Lô from AXA to understand how you concretely integrate sustainability into the underwriting strategy of AXA. Aurélie, could you tell us what concrete measures AXA has taken to reduce carbon emission, both in insurance and investment portfolios?
Yes, thank you, Virgile. So, you know, the scope of sustainability is very wide. So indeed, here we are talking about climate and climate change. So I will focus our commitments on climate. And AXA, for now, many years, have taken this at the top level of our issue and strategy. Because for sure, you know, rapidly we have understood that a scenario between 3 and 4 degrees increase, it's not insurable anymore. And as the IPCC warned us, even if all our current commitments from all governments are implemented, we are on track to be to 3.2 degrees increase and not the 1.5 commitment from Paris Agreement. So this is really why AXA has taken now climate and climate transition really as a distinct strategic priority. And climate transition and fight climate change has really become a strategic goal, part of AXA Progress Index. And the goal is to cover all our operations. So you know that AXA is an investor as well as an insurer. So as an investor, the goal, our goal is to reduce the carbon footprint of AXA portfolios, so general account assets, by 20% by 2025. And you mentioned it, it's also, our goal is to increase AXA green investments to reach 26 billion euro by 2023. After, as an insurer, of course, we have also a strong ambition and commitment. So First, we want also to increase the share of our insurance products with a positive impact on the environment and especially on climate through our coverages and policy and through our service offers, both on the climate change mitigation aspect and climate change adaptation aspect. So for instance, and Paula, I will take your example here. We now propose some endorsement for Build Back Better. So to use, better material and to rebuild like a flooded house or premises to be better adapt and construct in case of further climate perils. And on the insurance side as well, we also have set up some strict rule and criteria focuses on the highest emitters industries and sectors. So now, and but insurance is an open market, huh? So it's not because we stop insuring coal that coal plant will stop, but this is our ethics. We now don't want to support on the insurance side the highest emitter sectors. And to finish, we have 100,000 employees within AXA. So we, as an exemplary company, also work with all our employees. It's not only the sustainability team, it's really, we rely on all our employees for this transition. And this is why we have also launched AXA Climate School to upskill all our employees around the climate topic. And by 2023, we want all our employees really have followed this training, and we have allowed some time in their agenda. And like this, we want, at the office, at home, like all our employees make also their own effort on a private and on the professional, and also to foster some innovative idea around new products and services. And for sure, also regarding our own operation, we have also a goal of carbon neutrality, so to reduce our own carbon footprint from our own operation by 20% by 2025, and we will offset all the residual emissions.
Thank you, Aurélie. It's interesting to see the different strategies and different measures that you implement. It can be exclusion of some sectors, but it can be also prevention through, for example, Build Back Better and dialogue with the clients. So I think you have diversity of measures, and that's very interesting. Thank you. Now I'd like to turn to Henriette Setter, also for the next question. From your experience at Trig, which is interesting, I guess, because it's an important insurance companies and they have the reputation to be concerned with sustainability. What kind of products and business models do you develop to make a positive contribution to the climate transition?
So firstly, I would just say that we are really looking at the sustainability and everything we can do in all pieces of our value chain. And we do support the Danish government's goal to reduce the emissions with 70% from 1919 to 1930. And we do work with everything that is within our claims handling to do more, and also Aurélie say Build Back Better. And what we see is that we have implemented a lot of strategies for example, if your floors are damaged and we take pieces out of the floors, we dry more, we replace it with floor from the whole way and replace just, for example, instead of 25 square meters, we replace 10 square meters. And what we see is that it's not only the claims handling and the processes and the emission that is given a positive result, but we also use shorter time to repair, and we get a better or more happy clients in that way. So we see that this overall strategy of both communicating a clear expectation with the clients and working throughout our value chain that this is important both for us and for our clients to reduce our emissions, we see that we get a positive result on both. It's less cost, happier clients, and a better and less emissions. So, and in everything we do on the claims handling and repairments, we are trying to implement and push our vendors to reduce emissions in their value chain. Secondly, we work on a lot of models, like we previously here talked about, like when is a house uninsurable, and we do insure the house, but the problem is like the land where the house is built and what is happening there. And we are the last couple of years in Norway especially, we see that this problem with flooding is just increasing, and it's like 100-year flood is now hitting us every 10th year, which in simple math, you could say that the insurance pricing should go up with 10 times, which is not possible, or not, it's just too expensive, and it's not the way we need to work. So we need to implement smarter ways of pricing. And we created our own topographical water index, where we have this very advanced map of every house and every topographic in Norway, where we then try figure out like what is the risk from one address to another. And we work on these extensive models to understand how we can kind of make more complex pricing structure that is more accurate. And I think that using data, we use a lot of data and technology to implement these new strategies and these new individual pricing models, not only for houses, but also driving, how you drive, or how you use, or how you live. We can measure a lot of things. And I think that in the future, technology and data points that we are able to use would be more important. And luckily, we also have this very good GDPR and ethics around it, so we use it in a proper way. And finally, I think that it's important when we talk about like what is the most important thing we do is to prevent damages and loss, and to prevent accident, because by the end of the day, the most sustainable thing is that no damage is happening. And we put a lot of effort into that, both on a social level with and also with communicating with our clients and trying to inform them about risks. Either it's a fire, or it's there is coming a storm, or there's all of these things. So it's quite, there's quite a lot of communications today around prevention of loss and damages in our business model.
Thank you, Harriet. Again, a very interesting diverse range of measures that you implement at Tryg. Thank you very much for these concrete examples. So that was the last question of the first round of questions. Now we have 2 more rounds of questions. The next one is more focused on ethical challenges for insurance companies, and the last one will be more on perspective for the future. So for the second round of questions, I will start with Aaron Doyle. Aaron, you co-published with Mathieu Charbonneau a book chapter entitled The Contradictory Roles of the Insurance Industry in the Era of Climate Change in 2021. Could you tell us why is the insurance industry in such a contradictory position in relation to climate change?
Yeah, so this has been very interesting conversation so far, and been like exciting to hear what the companies like AXA and Tryg are up to. One thing that's also part of the context, I guess, is that in other ways, global insurers see climate change as a time of growth and opportunity. For example, a recent report from Swiss Re said climate risks will be a main driver of growth in property insurance. We estimate that climate risks will grow the global property risk pool by 33 to 41%, generating 149 to 183 billion US dollars in new premiums by 2040. Okay, and Matthew Charbonneau and I have argued that pointed to some tensions and contradictions in the insurance industry's place. And, part of what's underlying this is just that the insurance industry is so huge and has so many different realms that it operates in and so on. Paula's already talked about problems with kind of gaps in coverage, so I won't dwell on that too much, but yeah, there's definitely the danger of kind of continued splintering in markets and insurance increasingly becoming something for the privileged. And just to add on to what Paula was saying, like we're fortunate that insurance can help shield many of us in the global north from some of the effects in climate change, which is a problem largely caused by the global north. But at the same time, as Paula was saying, people in the global south, often have these uninsured losses, so they lack similar protection from insurance, even as they bear the effects of climate change, largely caused by the global north. So it's good for us, to be thinking about, some of the stuff that Paula was talking about ways that we can deal with that and deal with this problem about insurance playing a kind of key role in reproducing global risk inequality. And then we also talk about, as Aurélie and Henriette were talking about insurers are often being very active in the fight to, prevent or mitigate damage from climate change, which is I've certainly observed here in Canada with the Insurance Bureau of Canada, which is our property and casualty trade association, has done a lot to push to foster climate resilience and work with governments in flood risk reduction, climate change adaptation, educating consumers, improving land use planning, making targeted infrastructure investments, working on improving building codes, preserving wetlands. So that's great, and it's great to hear what your companies are up to. On the other hand, part of the tension is that insurers also do a lot to make climate change happen. And one thing we haven't really talked about so far is that the availability of insurance coverage is one of the key financial conditions enabling the development of fossil fuel projects, such as offshore oil rigs or with the oil sands here in Canada or oil pipelines, and they all depend on insurers. And most insurers won't insure new coal projects, but only a few have limited their coverage of oil and gas. So according to Insure Our Future, 41 companies have committed to end or restrict underwriting for coal projects, but only 13 have committed to end or restrict underwriting for new oil and gas projects. So that's a possible kind of leverage point there. And then another key thing is insurers also provide liability insurance coverage for corporations as well as directors and officers, so who may be sued for contributing to climate change. And these massive lawsuits against companies or groups of companies for knowingly contribute to climate change have become increasingly common. So insurance also protects these companies. So there's some tensions in the position of the insurance industry.
Thank you, thank you, Aaron. I think these contradictions are very interesting, and they could really fuel an interesting reflection in terms of ethics and also for potential essays. Paula, another question for you. The advent of big data in insurance opens new opportunities, like a better understanding of the risks and new and tailor-made solutions, for example. However, this trend may have also different consequences for social groups. For example, people living in underprivileged areas may pay higher insurance premiums as they are likely to face higher risks. Is there a risk that the use of big data by insurers lead to discrimination in terms of gender, ethnicity, or nationality? And how should insurers manage the dilemma between risk assessment and potential discrimination?
Yeah, I think this is a very interesting topic. I very much hope you get some submissions to the ethics prize around this, because insurance sits in a sweet spot in terms of information and knowledge, where you need to know enough about the risk to take the risk prudently and price it correctly. And that's one form of fairness, if you like, that you price actuarially according to the amount of risk that somebody brings. On the other hand, insurance has always been a good system, in fact, for ignoring a bit of that knowledge as well, saying, well, you know, we diversify, we spread the risk across the population or the pool of insureds that we have, so that we can smooth a little bit of the problems of some people being higher risk, because all of us can take that burden. And as a collective system and as a principle, that's great. But as a market, that starts to get a little bit eroded, because, you know, as a well-regulated market and with access to great data, there's the opportunity to more finely pinpoint. So who is at what type of risk to the system, and how should they be charged for that? And AI makes that even more possible, more exciting. So I think there's a lot of excitement around AI and what it can do for us, and including, for example, you could consider it as things like understanding, you know, precisely when and where people are and how that might therefore likely affect their immediate short-term risk, for example, for an accident or something like that. So you could imagine some sort of very dynamic insurance pricing models that could come out of this, where, you know, you could get a product because you're about to be, you know, about something really bad's about to happen to you or something. But of course, the prices of that would be insane. So, you know, there's a kind of dynamic there that makes you think more information is great and we'll be able to insure so much better because we know so much more about the risk. And I appreciate that view, and I think we do need to understand how to use that information. But thus far, we'd have to say that the better knowledge you have, actually, the more exclusionary insurance becomes. So in what we were talking about earlier with property insurance or disaster insurance, we know that what we call risk-reflective pricing and increasing granularity, and I know Aurélie has talked about how AXA is actually doing much, you know, it's really mining its data. You can understand exactly what type of property, and if you've got good construction data, what kind of construction has what kind of losses. Now, that means that, of course, you can price accordingly, but that may well mean that some of those people are excluded. If we take that into other areas like life and health, we could begin to know, you know, I wear this thing on my wrist. I mean, I think you can know an awful lot about me and my life and health. I think if my insurer is listening, it's fine. I'm keeping up my step count. But the point being, we can start to know maybe too much to insure people, because those who are of no risk don't need insurance. Yeah, so if we know a lot about the fact that we are very low risk, then we might take out some small thing for the very random stuff. But we would say, well, I'm not high risk, so I don't need insurance. That's not good for the insurance industry. Those who are very high risk will be too expensive for the insurance industry to be a rational decision for them. So I think we're in a really interesting ethical and dilemma stage between what AI does and how well insurance has worked as a system to ignore a bit of that. Actually, in our book in chapter 2, we talk about this issue of, you know, sometimes to insure you must ignore what you know. And that provides a better collective safety net, that provides better protection, in fact. So I think we need to kind of get comfortable with, well, where we're going to sit between too much knowledge, which AI may give us, at the same time as the quality of knowledge to take risk prudently, and how we're going to ignore some of that knowledge in order to keep people inside an insurance set. I suspect that societies, if they were to really think about this and take it to its logical conclusions, would say, I would prefer to ignore a bit of knowledge and we all put in a little bit of something so that everybody is protecting themselves in advance, rather than saying, well, those people fall out of it. And, in a lot of societies, we're not going to let them sit beside the road, or in the societies I live in, we're not going to let them go without health cover because they could, they were cut out of it because of their risk profile. So we will pay for them somewhere through our disaster funds, through our taxes, through our health systems. And I think if we can find some way to incorporate them into insurance, even when we know a lot about them, that would be important. So, and I'm keen to just sort of know a bit more about what others think about the relationship between AI and the different forms of insurance we take.
Thank you, Paula. As you say, there are very interesting ethical dilemmas here, and a lot of food for thought, I guess. Thank you. Now I'd like to turn to Aurélie. Aurélie, climate risks are analytically challenging to assess and quantify. A major challenge relates to data issues. Even when data may be available, they can become obsolete quickly due to rapidly changing climate trends, which is a problem for the reliability of the risk assessment models. Another key challenge is also the lack of technical expertise to assess climate risk. I wonder how you at AXA, you try to address these two challenges, so data and expertise to assess climate risk.
So thank you, Virgile. So maybe in your question, as AXA, as an insurer, climate risk, we often think with the double materiality. So what are the climate change impact on our activities, the outside in, and also how AXA, influence climate change. So, and here it's how we can mitigate and how we can fight at our level climate change. So for the first one, physical risk. So assessing physical risk from climate change is really a growing priority. And it has been an integral part of AXA risk management framework for many years. So we have people dedicating to modeling perils, climate perils, and especially climate change. And the problem with climate change is that the climate dynamics are changing also, and are not always fully reflecting and are not reflecting in historical data. So we are always, having new research and modeling around climate change. And we have several projects underway to integrate the impact of climate change in AXA internal natural hazard models from the several warning levels coming from all main IPCC scenarios. After, when it comes to, our commitment to fight climate change, so now it is true that we will need more and more data to be able to assess our clients, and particularly our commercial client. Even if, with the Net Zero Insurance Alliance, we have also target on retail, so including retail motor. So it means that when we will now, we will need to have the CO2 emission of your car. This is the kind of data we will request. No, but at the moment we work on proxy, but it is especially on the oil and gas company and all the high emitters, we will need more and more data, not only to assess their risk, but also to understand their impact on climate. And to come back, to your example on oil sands and tar sands and fracking. So at AXA, we have implemented some restriction around oil and gas company. And we need also, a kind of transition, including among our underwriting teams, because we have underwriter, and especially in North America, that have underwrite companies in fracking, oil sands, tar sands for many years, and now we ask them to stop underwrite those risks, to cancel their policies, and to understand the renewable energy risk and all the new technologies where we have no historical data neither. So it's this is why also when you say expertise and experience, it's really true in renewable energy and all the new technologies that we are seeing, and it's and for many we have no historical data and no idea of those new technology. Many new technology it's good, but are coming up, and it's complicated for us as an insurer.
Thank you, Aurélie, for these very concrete examples, and I think they illustrate very well the question. Henriette, another challenge concerns the governance of an insurance company. Indeed, board members and senior executives must be properly informed to take appropriate action to address climate change. What are the challenges that insurers face in the communication of climate risk to the boards of directors? Even if they are properly informed, do board members actually listen to the experts and act accordingly?
Well, I think that I could talk a lot about this topic, not only within insurance, but on a general level. But I try to keep it short. But when, for example, Aurélie is here mentioning double materiality, the knowledge level of our senior executive among, not only in insurance, but on a general level, there is a knowledge gap, I must say. And for us in this panel, and who has interest in the topics and has been studying this, we need to also acknowledge that not everyone would be able to kind of understand all the three-letter shortnesses we have, or all the new things that we need to keep our eyes on in this. And I think that for especially insurance, I've been with Trig for 2 years, and I see that we really have our eyes on this on a senior level. But I did an executive MBA studying some of the largest boards in listed companies in Norway for last year, and the knowledge of ESG on boards and how to explain what is knowledge about ESG on the boards it's kind of a lot of senior executives and chairs has a challenge with kind of explaining what is sustainability to us, and what is this, how do we kind of explain it in our company, or what is important to us. And a research done by another finance institution in Norway, Storebrand, a few years ago, showed that only 4% of board members on the largest listed companies in Norway had senior executives that had a ESG something on their CVs. So there are a knowledge gap, and I'm very happy that we see that it's developing rapidly, and more people are getting their eyes on this topic and understanding it. I'm very happy to be able to influence my teams and have them coming up to speed on circular models and new things that are happening in this space. But I think that when everything comes to an end, it's a complex understanding of like how to define it. And most people in a boardroom look at people that either can look at risks and finance and control the reputation, or on the other side, we are looking for people who can innovate a business model, or kind of look at new radical thoughts and make innovations. And looking at sustainability and ESG in that context, it means basically that people who understand regulations, changes in finance structure, the taxonomy, climate risk, and so on, is typically people from law school or finance, which is people that we already have in the boards or in executive position with that background. But in the context of ESG, there might be a knowledge gap today. And at the same time, we see that there can be a knowledge gap on innovation that doesn't make harm, or new business model that doesn't have any emissions, or circular economy. So I think that it takes us to the simple fact that people need the level of knowledge on this need to be implemented in the traditional roles. And when you're then discussing with experts on the field, you need to be able to kind of ask those critical questions and be able to understand what are we really talking about here. And I think that like double materiality, I know what it is, but does everyone around me actually understand it when I talk about it? And I think that is so important, that we kind of make sure that everyone knows what we're talking about and take it to a level that we all can kind of be on the same stepping stone here. And I think that we just need to acknowledge that all of these items need to be implemented in kind of a license to operate for leaders in the future. And we need to develop that knowledge and competence in all leaderships or in all employees. And finally, we can't avoid talking about equality when it comes to governance structures, because research shows that, and we have some local research in Norway around it, but there are all international reports about this, that when you look at equal boards and management group, they are more likely to prioritize sustainability goals and implement sustainability strategies, which I think is very important. So there is a knowledge gap, I believe, and it has to be part of everyone's responsibility, and we need to look at equality. And I'm very happy to be in a company that has all of these tasks highly prioritized, and we are really kind of best in class on some of these points, but I think that overall we need everyone on board.
Thank you for this insight, very interesting, Harriet, and thank you for bringing the equality dimension, which is also key in this topic, so thank you very much. So now I will start the last round of questions, which is on perspective for the future. And I will start this last round of questions with you, Paula. At COP27, a deal was struck to establish new funding arrangements for assisting developing countries that are particularly vulnerable to adverse effects of climate change. In particular, the Global Shield, so-called Global Shield, it's a new funding mechanism, was launched by the G7 group of wealthy nations and was backed by the V20, the Vulnerable 20 group of ministers of finance of the Climate Vulnerable Forum. So this is a new insurance-based mechanism that will provide poor and vulnerable people with better pre-arranged finance against disasters. I would like to have your view on that. To what extent can insurance-inspired mechanism contribute to foster fair climate transition in the future?
Yeah, I think that's an exciting outcome from COP27. It's an exciting outcome, and let's talk about the positives, but also be cognizant of the limitations of the system as well. So I think what's exciting about it is there's already been a sort of increasing shift towards sort of anticipatory financing for disaster, both from donors and development agencies, and also increasingly humanitarian agencies. So just to put that in context for those who don't think about insurance in relation to this, usually what happens is a disaster happens, and then the humanitarian and the development and donor system swings into action. So we've seen things like, the shocking flooding in Pakistan this year, for example. There's been drought ongoing for some 4 or 5 years now in the Horn of Africa. These types of things. Normally what happens is after the disaster, then the humanitarian and the aid system swings into action to try and come and provide some outcomes. The idea of this more anticipatory financing, and it's been going on for some time now, the World Bank's been important in this, Insure Resilience in Germany, The UK government has been putting money into this. So a number of governments have been trying to look at how can we set up financing in advance that means that the money will be there already instead of scrambling for it after disaster, or at least some of the money. And the other point about it is how can we leverage capital markets? So is it always just coming from the donor countries, or is there some way that we can use insurance, which is in fact a system that's based around, it's leveraging capital, right? So you put your money down today and you don't know when the disaster will happen, but that money then is going to be, increased exponentially when you get the insurance payout compared to what you put in. So that's the system that's been put in place. And we've seen things like the multi-sovereign risk pools that are in Caribbean, Pacific, Africa, that have basically encouraged or enabled countries to take a little insurance product that is what's called disaster liquidity. So like most of us, we get our insurance after our house is damaged to reconstruct our house. This is not about that. This is just about that immediate response phase where if you can get money in fast, you can keep clean water, you can provide temporary shelter. In case of drought, you can even try to arrest the situation by bringing the food in so that people can stay on their lands, maybe keep some livestock fed so that they're in a better position to recover from that disaster. And so the idea is that the country buys an insurance premium, and then when the disaster happens, this cash payment is made from the reinsurance companies, the global insurance system. So you get more bang for your buck, if you like, by using capital markets and not just aid and donor funds. So this is like a real ramping up of this global shield to say, well, we've already got these systems in place. Let's ramp it up a lot. Let's get lots more countries and development agencies' commitment to that. And so that, I think, is a really strong point because it's acknowledging up front that these disasters are coming and we need things in place rather than scrambling afterwards. Because we have to remember the humanitarian sector has many demands upon the cash it can raise. And so it won't always go to the places needed, whereas a capital market is agnostic. If a disaster happens, the money is triggered and it's there. So there's strengths in that model that I think are great. And I think it's a really successful thing that this has been acknowledged and that this global shield has said inequality, climate change disproportionately affects these countries that aren't, they are having bigger disasters that is setting their GDP back, preventing their access to, equality, growth, wealth for their citizens. And so this is a way of trying to redress that situation. So I think that's very important. I think the other thing we probably need to be aware of is it's exciting, it's important that we're doing it. It allows better disaster planning and anticipation. That said, it's only a drop in the bucket, right? So if you have 4 years of drought, then there is no insurance product that can pay for a disaster year after year after year after year that we know is coming. That's not what insurance does. And so in that sense, I think it's important, but we also need to acknowledge its limitations. And we need to build in other financial systems around that. So I see it as an important part of the insurance-based part of this, as a very important part of risk planning, risk management, trying to mitigate some of the effects of disaster in these countries. But in and of itself, it also needs to be bolted into a wider financial system. But I'm a supporter of anything that brings cash in after disaster, or preferably in advance of disaster to ameliorate the effects. And I think it's one of the most exciting innovations in insurance that we have seen, in a decade or so, this ability to rethink how insurance can trigger.
Thank you, Paula, for these very interesting insights, for future solutions. But also you mentioned the ethical dimension between North and South countries, and I think it's an important ethical issue in this debate. I would like to talk also about insurance as investors, and now I would like to turn to you, Aaron. As institutional investors, many insurers, and in particular life insurers, are taking steps to integrate climate change in their investment strategies and make investment decisions that support climate mitigation. Reinsurers are also involved in initiatives to develop sustainable finance frameworks that aim to mobilize finance to invest at scale in transition to a low carbon economy. How do you assess this evolution, also from the perspectives of the returns of the clients?
Okay, well, yeah, just before I answer, I just wanted to say it's been very interesting to hear stuff about what AXA and Trig are up to and learn about some of the internal challenges and stuff. So thank you for that. Yeah, so we talked about the different contradictory roles of the insurance industry, and you know, another one is that the industry controls the vast oceans of capital. So about 20% of the world's capital investments from premiums collected, and it's something that I think very few people in the general public understand, because they don't really understand the business model of insurance. But and historically, a really big piece of these investments have been in oil and fossil fuels. And so these vast, you know, and so, like, as I understand it now, it's 20% of the world's investment capital, and around 9% of that 20% is investment in fossil fuels. So I think that's somewhere around like close to 2% of the world's investment capital is money from the insurance industry in fossil fuels, if I've done the math correctly. Critics have said the insurance industry has been slow to divest relative to other institutional investors. So in June of 2021, the US state of Connecticut gave its insurance regulator a mandate to push insurers to bring their investments in line with emissions reductions targets. And so big companies are committing to transition their portfolios to net zero greenhouse gas emissions by 2050. 2050 is a long way off. Orly mentioned this goal of 2025 for AXA, but 20%, which is good. And AXA is also doing these green investments, which is great. So that's good, but you know, as I said off the top, we all need to do everything we can, just not take good steps, which I'm sure you appreciate, working in this field every day and understanding the global risk environment. And yeah, Virgile, you asked about return for the clients. You know, our whole perspective is, of course, that insurance is about more than that, but just in terms of return for clients, critics are also pointing out that oil and other fossil fuel investments are becoming increasingly financially risky. And so trillions of dollars in carbon reserves will have to remain unused if we're going to affect a successful transition away from fossil fuels. So, I mean, I think insurance companies also have to be aware that, you know, not only have to protect the planet, but also protect their shareholders by moving away from these increasingly risky investments.
Thank you, Aaron, for your insights. Aurélie, AXA is one of the founding members of the UN-convened Net Zero Insurance Alliance, a group of 29 leading insurers representing more than 14% of world premium volume globally. And the Net Zero Insurance Alliance is committed to join the Glasgow Financial Alliance for the Net Zero, GFANZ, chaired by Mark Carney, the UN Special Envoy on Climate Action and Finance, which committed 130 trillion of private capital to transforming the economy for net zero. What are the main steps to reach net zero insurance, and how do they translate into AXA journey?
Yes, so we were a bit late compared to our investment colleague. To come back to Doyle, it's true that there is also a Net Zero Asset Owner Alliance that started the job before us. But now we have the Net Zero Insurance Alliance, and our purpose is to have a net zero underwriting portfolio by 2050, in line with Paris Agreement, and with the 1.5 degree temperature increase above industrial levels. So what it means? First, we had to set up metrics to be able to monitor the insurance associated emissions of our portfolio. Because if we want them to be net zero by 2050, first we had to set up metrics, and they didn't exist prior to this alliance on work. And for that, we have worked with PCAF to have a common understanding and common framework and common metrics among the alliance to calculate the insurance associated emissions. So it is equivalent of the scope 3 category 15, for emissions. Knowing that we already calculate for sure the scope 1 and 2, and sorry, Henriette, if it is too complicated and what you said around double materiality, but when we talk about emissions, it's hard not to mention the scope 1, 2, and 3. So we already report scope 1 and 2, but what the gap was really on our insurance associated emissions and the scope 3 category 15. So that was the first goal of this alliance. After we have released, maybe you have seen this at the beginning of November, the first target setting protocol under consultation. And this target setting protocol then set up what we need to focus on, our main target. And also we then need to set up targets by the end of, by July 2023. And we will need to report the progress every year. So this is compulsory once you are a member of the Alliance. So each member will set its own target and then monitor and report on regular basis, but accordingly every year. So what it means concretely and how we will get to net zero. So first, we start by setting underwriting criteria and guidelines. And we focus on, again, the most greenhouse gas intensive emitters. So yes, coal, oil and gas, but not only, because we also want to fight deforestation, which is a cause of climate change. So we also target activities such as palm oil, timber, soya, and agri-food that lead and are cause also deforestation. So we have now a bunch of banned companies because we consider that they are too GHG, greenhouse gas intensive. But this is, we don't only want to clean our portfolio. We want also to move the real economy. It's not because we ban those companies that they don't exist. We want also to work with our clients and to engage with them to move really the real economy. So we have also targets on engagement with our clients and insured on their decarbonization strategies. And at one point, we need to follow that and to agree on certain target with them as we target to be net zero. So we will all need to be aligned on that. So it's underwriting criteria, engagement. It's also new product. Again, go back to new services and new product to support this low carbon economy. And in product, it's also new technologies. Again, coming back to renewable energy, we need to take some new risk that we don't know with no historical data. So it means it's also a commitment for climate to underwrite things that we have never seen. When it comes back to CCUS also, all around, and battery transportation, all around the new technologies and renewable energy. And so this is what we call also the green business or ensuring transition. And also last, not last, but what is really important also is to improve our claims management to promote a net zero economy. So here we also can include the economy, circular economy. So, for example, for our auto policy, we propose, to replace with already used parts. But then here we also need to explain it's not only because AXA wants to make some saving, but it's because also it's better for climate. And this is also why it is very, very important to train all our employees, because they need to be convinced of that too. So it's also improving claims. And last piece also, it's to advocate with government, our goals, and also to come back, for example, to land use planning. It's very important to understand that, of course, public and private and insurance, we really need to work together. And we have data, as you said, we have modeling, we have mapping, but we cannot, avoid a new construction. This is the public land use planning. And we always advocate that we would like to work more with public, but it's hard to happen.
Thank you already for explaining your strategy, which has many dimensions and many different levels, and we understand better how it works. Thank you. So my last question goes to you, Henriette. On the one hand, private insurance companies see climate change as a business opportunity. Imagine an expensive role for themselves. On the other, regulators have warned that more frequent and intense catastrophic events present systemic risk to the insurance industry by putting at risk their solvency. Should insurance companies conduct a stress test exercise to assess their vulnerability? And are stress tests reliable given the difficulty of quantifying climate change-related risks?
Well, I think that Paula touched upon this topic very well. I also think that we should do anything we can to work with research institutions and governments and to understand the changes that we are looking upon and collaborate to figure out how to meet all these new challenges. But I also think that touching upon what Aurélie was discussing, that we have, like, the vision of our company is that in a world that changes, we make it easy to feel safe, and I think that we will continue to do that with innovations in our products and services, and in collaboration with all our stakeholders, and figuring out how we can create new products and new services for this net zero economy. And I think that it might not be the same type of structure, the type of products that we've seen previously. All my life, I've been creating products that people didn't buy before. I've been in media technology and been part of the whole transition from linear to IPTV. And I think that we should implement this more of these thoughts that as long as we provide safety within the context of insurance, it might be different products in a different way, but our purpose is to create safety for our clients and for people, and I think we could do that in a new way as well. But to be able to stress test and understand and be more agile in the way we are creating products, it's part of the new kind of digital transition that also insurance companies are and the journey that we are seeing here, both with data and everything. And I think for the competition and for those young people, I think if I was under 35, I would have 10 topics here that I would like to dive into, because it's a really exciting space, and lots of people that I know has kind of mentioned this, which Adam is saying, that insurance has a really symbolic role in stating that climate changes are real, but also being part of this new transition that the whole every company in the world are seeing right now. So it's like a very interesting position to be in, and we are working with so many interesting companies in interesting problems that it feels like it's the center of attention right now.
Thank you, Henriette. I think it was a fantastic discussion, very interesting. And as you said, there are plenty of issues, plenty of topics to reflect on the ethical and sustainability dimension of the insurance sector. To mention just a few, we talked about the financial exclusion, the knowledge gap, the north-south divide, the insurance protection gap, also the gender dimension, but there were many other topics that could be food for thought. So thank you to all of you for this fantastic discussion. Now I would like to leave the floor to Paul Dembinski for the conclusive remarks. So Paul,
thank you very much. I learned a lot. It was very, very inspirational conversation. Thank you for sharing your knowledge, your concerns, and your expertise with the audience and with all of us. So first, inspirational. So I hope that it will be a multiplying effect on the number of issues that from insurance field that will be raised in the future essays. So feel free to join our effort to disseminate the information about the competition within your companies and beyond. I think it is important to have this ethical sustainability discussion visible within the insurance sector. So this is the first point. The second point, I think, four observations from the conversation. First, I think it was very clearly shown that ethics and sustainability are complementing each other. They are not redundant one to the other. Ethics is about how we do business or how the insurance companies or finance is doing business, whereas sustainability is more about the targeted objectives. And I think time to time we have the impression that people say, well, sustainability is so important that ethics somewhere has been swallowed in. But it's very important to say that ethics has a place in the debate. This is the first point. The second point is built around the point that was made, I think, by Aaron at the very beginning, speaking about insurance exceptionalism. And I think many of the issues that have been covered and concerns show that there is an exceptional industry. It is an industry that can touch sustainability on the asset side and also on the liability side, which is not very common. And I think this has to be put in line, and also the symmetry, how difficult it is to produce or to maintain or to develop symmetry between the asset side and the liability side in terms of taking on board sustainability concerns. So this is I think, very important. The second point is about insurance as a driver of adaptation. And many examples have been mentioned. It's not only betting on, but also driving change through the knowledge, through the product design as an educational item or tool. I think it is has been very nicely shown by examples from the industry practitioners, and thank you very much for this. The before last point is about that big data, because of course there is the segmentation of markets and products is a temptation somewhere. And we have seen that there are some ethical limits to the use of kind of data that can be used in order to individualize the product and the pricing. I was wondering to what extent the industry has already thought of having a kind of intra-industry convention on what kind of data we are not going to use for segmentation. So it is an ethical dimension which could be taken on board on the industry level in order to manage a proper playing field. And the last point is about post-COP27. There is a place for institutional innovation. So as Paula, I think, mentioned, possibly what happened in Egypt last week or 2 weeks ago is a kind of emerging world insurance company, as we had the World Bank, where the private-public partnership could play better law, or plainly can be put into operation in order to ensure those that private capital is not able to reach and is not able to insure. So this very, very few concluding remarks. I could probably have a much longer list, but thank you very much again. Thank you, Virgile, for moderating this panel. And I hope that we meet soon face to face with a glass of wine in hand, possibly at the ceremony for the prize winners in 1 year from now, more or less. So thank you very much. It was really a pleasure meeting you. And thank you especially to Paula, that is really a night worker. Thank you very much for this. It's a performance. It's really a performance. Thank you very much.
Thank you to all of you.
Thank you.
Thank you.